Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, August 7th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend, watching out for short-term caution. Check the trend gauge over here. You see we've got leaders marked as neutral after a bunch broke the 21-day moving average last week. Added the green arrow today on some afternoon strength as we had a couple undercut and reclaim, and for the most part, leaders held up okay today. Short term, we're showing neutral. S&P 500 got back above the 21-day moving average, so one closed back above there. NASDAQ 100 also with afternoon strength, closing just barely below its 21-day moving average. Medium term, all five of the major indexes are trending above their 50-day moving average and also above the long-term 200-day moving average. So what happened today? Yields took a big move down on Friday, and despite that, we had a big afternoon sell-off. Well, kind of the opposite today. Yields bounced, but the market shook it off and showed a lot of strength in the afternoon. S&P 500 and NASDAQ bounced right where they needed to, the 7/12 or July 12th breakout level. So supported right where we wanted to see it, where the bulls wanted to see it. Let's put it that way, and that's a good sign. So we'll see what the rest of the week brings to us. Here are the final numbers on the day. Our 8 growth ETF composite, the RG8, up 0.4%. S&P opened the day up 0.45, sold off, bounced nicely, up 0.90%. NASDAQ 100 very weak early. Gapped up 0.6 and then showed extreme weakness, and really nice afternoon performance put in, up 0.85%. The Dow, the leader today, up 1.2%. Mid caps up 0.8. Russell 2000 small caps, the laggard, just up just less than 0.1%. Global diversified 60/40 stock and bond up 0.33%. Bonds were the laggard in that equation. In-house GROTECTION got stopped on a few things today, but still managed to be up 0.52%. We'll get into the portfolio changes that we made when we hit the tail of the tape. Let's get right into the index review here. We'll start off with the S&P 500, and we're going to be watching the daily stochastic here. What we're seeing, stocks, they're entitled to have periods of weakness, and that's certainly what we've seen over the last week and a half, starting with the big negative reversal on July 27th after making new highs. 3 days of consolidation and then lower lows after the credit downgrade last week, and then another lower low on Friday. So inside day today, attempting to put in a bounce back above the 21-day moving average. That's the green line, right into the declining ADMA. Short term, we want to be trending above the ADMA. This is 4 sessions now below the ADMA, but we did hold where we needed to. Let's take a look at a 60-minute chart here. Here is this is the 7/12 breakout area here that I'm talking about. We attempted to break out earlier at the end of June, the beginning of July, pulled back again, but this was the clear breakout area on 7/12. Let me bring it back up on the daily so you can see what I'm talking about right here. It's marked with this arrow. So 7/12, that's our breakout level. As long as we stay above the support levels below there, that breakout from 7/12 is still intact, and that's about where we bounced today. Where we closed Friday and bounced today is what I should say, around this 44.72-ish area. Overlaps with the range of the breakout day. We could actually go as low as 44.60 and bounce there, and that breakout would still be intact. So this is really putting up a decent fight today. Will it turn into just another suckers rally the way we did on these 3 days after the big negative reversal on 7/27? Well, we don't predict. We'll just watch what the market's doing and be prepared for all outcomes. But you can see price hooking up. It got went from overbought down near oversold, didn't quite hit the 20 level, but hooking up on today's strength on the 60-minute stochastic, you can see we didn't get to over bounced or oversold either, but we did hook up today. We did have the stochastic bounce after getting oversold, deeply oversold for 2 days last week after the big negative reversal on Wednesday. So let's go to the NASDAQ 100. And kind of the same setup here. 4 days below the declining 80 EMA, closed just barely below the 21 EMA, arguably right on it. You do see the little hook up there in the stochastic from right at the 20 level. That's the oversold level. And let's go to the similar 60-minute chart and take a look at the breakout. So here's your 712 breakout. We pulled back right into that range again. So this is where we wanted to bounce, and that is where we bounced. This despite Tesla, their CFO, abruptly leaving after being uh, at the company for 13 years. That shook the stock a little bit and shook us out. A clear break below the 10-week moving average and a break below the 50-day moving average. We'll take a look at that when we go through the portfolio changes. But it may just be now that we've gone down to an oversold area and bounced at a normal spot where we should bounce. And now we'll see what happens when we approach the 21-day moving average and the declining 8 EMA moving average, which is our ultra short-term indicator. Onto the Dow, this is having no such issues. It did have 3 closes below the 8, but got back above it, bouncing at the 21. Also a stochastic hookup, but nowhere near oversold. Obviously showing relative strength, which we've been talking about for weeks. Let's flip to mid caps, the MDY ETF. Also a stochastic hookup bouncing at the 21 EMA. So again, holding where we would want it to hold. And this is where 712 on this chart. 712 is right here and very clearly holding that area too, which is a couple of percent lower, and the 50-day moving average is coming up near that level. So that's an additional level of support. IWM undercut but reclaimed the 21 EMA today. Good stuff there. Didn't have the stochastic hookup as it was barely up on the day. But here's your 712 level right there. It was actually undercut shortly after we got there and reclaimed it, and we didn't test it. Obviously, what we're really looking at is the fact that this put in a cup and handle at this 190 level, got 5% above it, and now a very normal pullback and bounce to the 21-day moving average. So those are the 5 major indexes. Let's go next to the VIX. VIX was weak pretty much all day today, even when the market indexes were weak. Maybe that was foreshadowing the afternoon bounce, but anyway, that is what we got. Still above the 50-day moving average and the 21-day moving average and this 15 level. So mild concern there, and it has ticked up, and so has volatility on, or the ATR on the S&P 500 has ticked up 5/100ths of a basis point over the last week. So there's the VIX. Let's go to UUP. This is the dollar. The dollar gap down on Friday. Gold and silver got a bounce then. Uh, Small up day for the dollar today, but weakness across the precious metals. GLD down 0.23, SLV down over 2%, sitting on the 200-day moving average, and GDX, gold and silver stocks, down less than 1%, holding the bottom of the range. Let's do Bitcoin very quickly. Bitcoin was weak early, finished positive, but the Bitcoin stocks did not have a good day. And now we'll go to bonds. Bond prices down across the board, but note the hookup after bouncing last week from oversold. This may, if the prices start going higher, this may put a top in yields, and that would be a tailwind for bulls. And it's coming from a normal area where we would expect to bounce on the indexes. So also a bit of good news for stock bulls. There's the BND. Let's go to TLT, the long bond, down today, down 1%. Let's now look at the TYX yield on the long bond. Inside day yesterday after the big pullback on Friday, up 1% on the day, not help. But as I said, afternoon strength, despite the fact that we saw that. TNX, the 10-year yield, Closed near the bottom of the range, but up 0.4%. Again, an inside day there. Yields hooking over from overbought. So possibly time for yields to come down, bond prices to go up. Yields coming down is good for growth stocks. So that is the inter-asset correlation that we cover in every video. Let's go to the tail of the tape now. You can pause this and read it. Stochastics, you see, we just went from the red arrow, seeing the hookup. So added the neutral, possibly heading to, if we have the cross of the Stow moving average, we can change that back to green. RG8 still a bit weak. NASI RSI crossed over to negative last week. Dollar bearishly strong, but maybe we'll get a reprieve there. And TNX and TYX near highs. We need more of a pullback there. And when I say we, I'm talking about bulls. You know, I am an optimist at heart. I like making money in the market. I like our clients making money in the market, but I also like knowing that I've got the downside protected if we don't get what we want from the markets. We're on the bear case with the break below the 21, but we did have one close back above on the S&P. And as the NASDAQ and S&P ended their 4-day losing streak, so the day count went from down 3 to up 1. ADMA 4 days under the ADMA on the S&P. Once one closed back above on the S&P. Expectations being negative with us below the 21, short-term negative anyway, but now being at or on the 21, a little bit more toward neutral. From a sector standpoint today, 10 out of 11 of the S&P sectors were up. The only one that was down was XLU. Semiconductors, home builders, and aerospace led. Aerospace on the back of Boeing. On the downside, gold and silver stocks, and biotech. So in-house in the portfolio with the weakness in the morning and more movement under the 21, we sold our UPRO. When the NASDAQ bounced in the afternoon, and every time it tried to come down, buyers came in, so we got rid of our QID also. Yes, I know we're still below the 21, but sometimes you have to look at not just the moving average, but what is horizontal support and what's a likely area to bounce, and also where is the stochastic. It's not just a pure decision on the moving averages. There are some other factors that go into it. So in this case, the sold the QID when that happened. And then let's look at Tesla and what happened with this today. So pre-market, the news came out about the CFO leaving. We opened slightly down, had a flush, a little bounce, and then another flush. We got stopped out on our position. If you take a look at the daily chart here, you can see we closed just below the uptrending ADMA. We are in oversold territory. It looks worse on the weekly, but maybe back above the 10-week by the end of the week. But that was a clear break below. We got stopped out, cashed the rest of our gains on on Tesla. So we'll see. We can always buy it back if it rights itself. It's been a bit on the weak side lately since this earnings gap down. And the 21 EMA has been completely in charge. We took a position here when intraday it got back above the 21. It failed Friday to get back above the 21 and then broke this little bear flag. So stopped out on Tesla. But our beta is still above 1, which is where we want it to be as long as we're still above the 50-day moving average for the most part on the indexes. I mean, if for some reason NVIDIA would gap down 10% tomorrow, we're not going to hold on to our NVIDIA position just so that we maintain a 1.0 beta. This is our target and kind of the floor that we like to have, and that's why we don't sell out our SSO position just on minor weakness. That's more of an intermediate term to possibly long-term position. So bottom line on the day, yields up, but the S&P and NASDAQ 100 bounced near their July 12th breakout levels on afternoon strength. Let's see what tomorrow brings us. Let's take a look at a few tickers and standout. Palantir all over the place after hours. It broke the 16 level after hours, but is now positive on its earnings report. So an undercut of the 50-day moving average, an undercut of the 16 support, regained the 21 after hours, and actually back above today's close. So a nutty round trip for Palantir on its earnings report. I didn't get to read any of the details on it. This is an expensive stock, but when it gets supported and buyers come back in, that's what you look for. A couple of others to take a look at. Upstart hit hard today. Uh, More than hit hard. This is one of the reasons why we use the ultra short term ADMA. If you got in this right, which could have been about the 40 level, and you just stayed patient and didn't complain while you were riding the ADMA higher, and then all of a sudden you broke below the ADMA, cash those chips in, especially at least part of it. If you got the nice gains that you got from 40 to above 60, because these stocks can come apart when they're high growth and a couple of hedge funds decide to liquidate. It's really that simple, and that's why when we have decent gains on something that's been trending big time, we use that ADMA to cash them in. Uber was trending nicely above the ADMA for a while. Once it broke it the first time, that's when weakness ensued. We're in SMCI, and this made higher highs today, but we cashed some of that in on two closes below the ADMA last week. Yeah, it made higher highs, but I'd much rather book the gains than see it down near the 50-day moving average and giving up multi-week gains. So we're always down with doing a combination of offensive and defensive selling at Revere. We prefer the last sell to be defensive, that being either a break of a 21-day moving average, which it's been over for a while, or the longer term 10-week or 50-day moving average on some weakness. And that was our rationale for selling Tesla today. Let's see. IonQ is another stock that has been a recent leader and really took it on the chin today. You can see, and again, like I said, this kind of hugged the ADMA during most of this run. But when something goes from 15 to 20 in 3 days, if you're not looking to take some off the table, you're just asking for the 2x4 that lurks around the market corner to take you out. And that's what you saw there today. That's going to wrap it. As always, love to hear from you. My email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. We thank everybody that's finally clicking the like button on our YouTube videos. We get hundreds of watches, but not as many likes. I know it's easy to just ignore doing it, but we'd appreciate it if you do it. From what I've been told, the algorithms like that, and it gets more exposure. So you can also email my partner, Dan Stewart, dan@revereasset.com, if you're interested in becoming a client. There's the phone number. Remember, it's not how much you make in the markets, it's how much that you can keep. We turned short-term cautious with the break below the 21 on several negative reversals over the last weeks. We've got lots of dry powder and ready to put it back to work if the market reasserts itself to the upside. On the contrary, if it comes down and bounces at the 50-day moving average, that would be another possible outcome that we would certainly be open to and be looking to pick up some leaders down there. On the other hand, if we break below the 50-day moving average, we're going to get a really defensive. We don't predict, we have a plan ready for all outcomes. And with that, I'm going to wrap up today's video for Monday, August 7th. This is Don Vandenbord with Revere Asset, telling it like it is. Just the facts here at Revere, just the market facts. Thanks for listening and have a great day.